Good evening, ladies and gentlemen. This is Barry Norman on behalf of ETX, and welcome to our class called Architecture Trading. Now, tonight's class is brought to you by ETX, and for those of you that are joining us tonight and don't know much about ETX, we are a regulated provider, and I'm therefore required to give you a risk warning. So let me read that and get it out of the way. Trading in the financial markets can result in the loss of the amount invested. Do not trade with funds you cannot afford to lose, and seek advice if you do not understand the risks. All information is provided in this webinar for educational purposes only. ETX Capital and the presenter, me, are not financial or investment advisors and do not recommend any securities or instruments of any kind. Any securities or instruments that are mentioned tonight are for educational purposes only. And for those of you who join us through a promotion or through the internet and don't know anything about ETX, we are a fast-growing financial services company based in London. We are authorized and regulated by the Financial Conduct Authority, the FCA, and we are also a member firm of the London Stock Exchange. When you trade with ETX, you can select, especially if you're an entry-level trader, our ETX binary options program, and that's a great place to start learning, where you're simply predicting whether an asset will go up or down, and your risk is only the amount that you type into the computer. Or you can select to use, if you're in the UK, you can do spread betting, or you can trade CFDs wherever we're regulated throughout Europe, or you can trade Forex with us. You can trade commodity stocks, indices with ETX. You can either trade with our ETX Trader Pro, and that's our live online internet program without having to do any downloads. It's very simple to use. Or you can download the more advanced ETX platform for the MT4 Trader, where you can attach expert advisors to it. You have very advanced charts, and you can also use it to automate some of your trading systems. But whatever you need, one of our customer service agents will be glad to help you along the way. Now, tonight's class is an introduction to, or a beginning of what is called our Architecture Trading Series. Now, normally when I talk to you about basic charts or trend lines, or even at the beginnings of support and resistance, I talk about all of this, building your foundations, building what an architect would do, or a designer or a builder would do to build his building correctly. And that means all of the information you start with and gather before you begin, and getting the basics, putting in the foundation properly, will get you off on the best foot. And a lot of traders get lost in candlesticks, or they get lost in memorizing all these patterns from channels up and channels down, and wedges and triangles and head and shoulders patterns and teacups and God knows what else there is. Then I tried to come up with an easy to understand way of interpreting movements in the marketplace, something that all of us could use. It fits under technical analysis, but that we could all use because it involves things that we do in our everyday life. And it makes it less complex, because there are many large players in the Forex market, such as hedge funds and large banks, and they all have the most advanced computer systems to constantly monitor any inconsistencies between the price of currency pairs, between oil, where gold is moving. They're doing all the technical analysis faster than we could ever do it, and they're investing huge amounts of dollars. And they're not as concerned with stop losses because they can float until the currency or the asset does what they need. But given these programs, it's rare to see any major inconsistency last longer than a few seconds. And unfortunately, too many retail traders try to take advantage. But what happens is we're behind the ball most of the time. And it's our losses that are funding their profits. But if we can find ways to understand the markets better and have a better understanding of what's going on, that maybe we can find the right way or the right story to use to enter the markets and interpret what's going on. Because remember, it's all about price action, and it's all about the battle of the bulls and the bears. So many traders turn to Forex technical analysis because it presumes that all the factors that influence a price, economic, political, social, psychological, have all been factored into the current exchange rate of the markets. So Many investors and so much money exchanging hands each day, the trend and the flow of capital is what becomes important, rather than attempting to identify a mispriced rate. So one of the greatest tools or goals of a technical trader in the Forex market is to consider whether a given pair will trend in a certain direction, or if it will be sideways. And that's more important, understanding what is happening, getting a picture of what is happening. And we can do this by seeing patterns in charts and seeing trend lines and understanding this battle, this tug of war that's going on. Now, the most common method to determine these characteristics is to draw trend lines that connect historical levels and that prevent a rate from heading higher or lower. These levels of support and resistance are used by technical traders to determine whether or not the given trend or lack of trend will continue. Now, what I've tried to do for you is I've tried to think about this as the story of an elevator going up and down in a building. You have high rises, you have low rises, you have office buildings, you have hotels. And each story or each elevator in each one of these buildings would be going different, different distances and have different types of stories, different types of projections. An elevator in a high-rise apartment building, well, how many times a day is it going to go to the penthouse? It's not. It's going to go to the more popular floors. Okay. Maybe there's private elevators. Maybe there's parking lots. Okay. So you have low-rise buildings. You have high-rise buildings. And if we could understand how the market is moving and put it into one of these type of buildings, do we have a volatile market? Do we have a very active market? Do we have a market that's waiting on something? Do we have a risk-off market? All of this will help us interpret the markets. A lot of traders say to me, well, I trade this way, and this way. I'll say, well, do you use that in a congested market, or do you use that pre a major event, or do you use that in a very volatile market? Oh, no, I use it all the time. Well, the fact is, every market is different, and the technical analysis or the tools or the strategy you're using doesn't always fit into the market we have today. And therefore, it requires us to have different types of markets, different types of analysis to fit each type of market. Now, remember, support and resistance are one of the most crucial elements of predicting where an asset not will go, might go, and at what levels you might get some type of reaction to a price. Because understanding this will give you a step up. So support is the price zone below the current price, and it's just the opposite if we're in a downtrending market. So support is the price zone below the current price where price declines are likely to stop and reverse. Resistance is the price zone above the current price where price advances are likely to stop and reverse. So imagine an elevator. Prices are the people in the elevator, and there's a floor and a ceiling. And as you move up, the ceiling becomes the floor, and you reach the next level. This is like support and resistance. Now, in an uptrend, prices advances are blocked by resistance, and price declines are stopped by support. So again, imagine an elevator. If you want to move up, and you don't know where you're moving up to, but if you want to move up to the next level, you need to push through that ceiling. And when you do, that ceiling becomes your floor. So initially, that ceiling is your resistance. And when you push through that ceiling, it becomes your support. But you also know that there are many resistance levels, because if you're on floor 10, you can know that floor 11 is a resistance level, floor 12 is, because you have to break through each one of those. So you can project other support resistance levels ahead of time. Now, support and resistance are now actual mathematical calculations of prior market action and reaction, and sometimes we call these pivot points. These calculations are well known as support and resistance lines are published and easily accessible and change continually as price moves. But there's many ways of getting support and resistance. And I firmly believe in what I call eyeballing. Eyeballing are looking at prior charts, older charts, and older price movements to see where price has hemmed and hawed in the past. So the key to support and resistance in trend line is the first part of technical analysis. Technical analysis looks at the history of prices and tries to find similarities. So tonight we're going to look at a 4-story building. And we're going to try to interpret the elevator, and we're going to try to see how that fits into price on a price chart. So imagine we have this building that you see on the screen in front of you. It's a very large building in a very big downtown suburb, a big downtown city, and the building consists of several floors. You can see the first floor, or the ground floor, is mostly retail space. You know, it's not a huge building, but it covers a block, and it's got some shops. It's got a coffee shop, a donut shop, a place to get gum and all the miscellaneous stuff, and a couple odd and end boutiques. Then we have the first floor. First floor, you can see by looking at the building directory, is mostly professional offices, doctors, lawyers, accountants, and the like. The next floor is the support staff for those offices. So, you have the big doctors and lawyers office up here, and then they have the upstairs they have the law library, the law review, they have their clerks up there doing the work. The next level is conference rooms. And how do you know this? Because you're looking at the directory, or maybe you got on the elevator, and the elevator went up and down, and you didn't get off the doors, you looked out the elevator. And the next floor was conference rooms. And you see, when the doors open and on the floor, you see big signs, conference room 1, you see no schedules there. Conference room 2, you see a meeting schedule at 2 and a meeting schedule at 4. Conference room 3 says it's booked for the whole day. Think of these as like economic events. They're scheduled on the counter. The top floor, or the roof deck, is the smoker's deck. It's got lots of places for smoking. It's got a nice little lunchroom where people who bring their lunch can sit. It's got some vending machines up there. It's just a social area to support all the people that are working in the building. It's not really open to the public. It's where the people who work in the building go. Okay. Now you're asking, why am I telling you this stupid story? Well, let me tell you, it took me a long time to make up this story for you. It took me a long time to find this building, a photograph of a perfect building. Because, now, let's imagine, and also remember there is a basement where the janitor's offices are and the maintenance guy's offices are, and below that there's just one floor of a parking level. Now, I tell you today, you're gold, and I paint you gold. I tell you gold right now is trading at $12.50, and I shove you in the elevator. Now, you don't know if gold's going to go up or down today, but you do know gold doesn't go in one direction. And you know that there's points in which gold might stop or might not start. Now, the door to the elevator shuts. Now, you don't have any hands. You're a gold bar. So you can't push any elevator button, so you're just sitting on there going for a ride. Now, the door shuts, and it goes up to the first floor. And it opens up, and you can see it's beautiful. These beautiful professional offices with dark mahogany, a big, thick carpet, up and down the hallways. Everything's hushed and quiet. But you see the cleaning lady, with the vacuum, vacuuming the floors. Now, it's early in the morning. It's 7:30 in the morning, so nobody's at work yet. The door shuts, and the elevator goes up to the next floor. And you can see, it's big open areas. You can see the glass offices, and you can see the names of the same law firms and doctor's offices all below. So you can see it's the support staff. and then the door shuts again, and it goes up to that conference room floor. You saw all those signs before. And then the elevator goes up one more floor, and you can see all the smokers out there on the balcony smoking their cigarettes. And see, oh, look at that nice little lunchroom people area, tables and chairs sitting around the glass doors for people to sit and, have lunch. There's vending machines, there's coffee machine, there's, all that kind of stuff. Nice. So you said, I wouldn't mind working in this building somewhere. So the elevator comes all the way back down and goes down to the basement. And the door opens in the basement, and you see the janitor's closet. You see the sign that says mate. You see all the buckets and mops and everything else. Okay. Now, you're a pretty smart person, right? Even though you're gold at 1250, you still got a brain. You may not have Mars, but you're pretty smart. Now, first, it's 7:30 in the morning. Markets aren't even open yet. But very shortly it's going to start to be rush hour because lots of people are going to be going to work all over the town, and you look out the door and you look out on the street and you see there's a bus stop and a subway stop right outside. So you start to say, so you know what? This downstairs retail area is going to probably get busy, especially that coffee shop and that donut shop, as soon as people start coming to work. And people start coming into work, not in the building, but in that whole neighborhood, between 8 and 8:30. So you can figure, the elevator's not going to go anywhere yet. So you figure right now that elevator's sitting on the ground level. The best shot is to probably go down to the basement, pick up the cleaning people. They're going to probably go up to the first floor and second floor. And maybe some odd and end person might go up to the roof to smoke a cigarette. That's it. So you can predict where the elevator might go now if the door is shut. But you're also pretty smart. Those doctors and lawyers start dribbling in around 9 o'clock. Same thing with that support staff. So when those doors shut after 9 o'clock, most likely that elevator's going to go up to floor 1. Doesn't go to floor 1, it's probably going to go to floor 2. There's no conferences starting till after 10 o'clock, so there's probably going to be nobody going up to floor 3. And if it goes up to 4th floor at that time of morning, it's going to be just somebody probably going up to smoke. So it's going to drop somebody off and come right back down probably the ground floor because it's going to be picking up the next doctors and lawyers or whatever else to go up to the first floor. And you can predict the movement of that elevator at that particular time of day by using some of your own smarts. Nothing complicated, just some simple observation. Now, you also know, come 9 o'clock, something's going to happen. Come 1 o'clock, you can predict that elevator's going to keep going up to that second floor, picking up all that support staff, taking them down either to the ground level to go out to lunch, or they're going to be riding it up to the top floor to sit in the lunchroom and eat. But throughout the day, every time that elevator goes up to the second floor, if it's not going right back down, it's probably going up to the roof to pick up those smokers. Now, you made lots of trips to that roof, so you're going to be going back to that roof quite often to pick up those smokers to bring them back down to the second floor and the first floor. Okay. When the conference is starting, so you've now kind of projected throughout the day how that elevator should be moving. You've also know that come 5 o'clock, most of the people are going to start to go home. The whole day conference is ending at 5. The two other bookings in those other conferences are over at 4. So, after 5 o'clock, those conferences are going to empty out. So most likely you're going to have trips from all the way down with those people. But then after that, you'll get trips up from the lawyer and the support staff, probably up to the rooftop for those who are smoking or for those who are, going home. And until 6 o'clock, you get lots of people mostly going downstairs. After 6 o'clock, you're going to have most of those people that work late going up to the roof to smoke. Okay. After 8 o'clock, you have almost nobody in the building except for the maintenance people and the janitors who will be taking out the trash. So the elevator may go up to 2 and sit there for quite some time because the maintenance man's picking up the trash. There's nobody there. Now, what did we just do? We described a story of how price might move. And when you can see this price on a chart, you can start using this to predict price movement. So actually in here, this is an old picture of the Euro JPY back when I started developing this, but we can actually tell this story. Here's the elevator on the ground floor. It goes up to the first level, comes back to the ground floor, goes up to the first. It goes up to the second level, comes back down to the ground, goes to the first, goes to the second, goes up to the roof, comes back down to the ground floor, back up to the third floor, down to the second floor, up to the roof again, down to the third floor, up to the roof, down to the third floor. And what it's done is actually stayed perfectly in here in this 4-story building between the ground level and the roof. So we can start using this to tell a story about price movement. Now, there are many different architectural strategies to fit the kind of market that we're in. So we have the 4-story building. We have a high-rise building. Elevator building, high-rise elevator building is, what do you have a volatile market. If you go back and look what happened last week with the Federal Reserve meeting, that was the perfect story of a high-rise elevator. We have basement trading, where prices are very low and just keep on easing down, but they're full of congestion. We have apartment house trading. Apartment house trading is really difficult because that means it's hard to even tell when the elevator's going up and down because you don't know when people are coming home from work, going to work. People are going all over. But if you learn to look at the charts and tell a story, you can then start looking at it and making some sense out of price and price movement. So again, if we look at the 4-story building, the ground floor is filled with retail and coffee shops. The next floor is professional office. Next floor is conference rooms. The top floor is storage. Then there's the roof for the smoking. And let's not forget about the basement and the janitor. Again, we can look at copper. Okay. When you see this, when you can isolate this, and we'll go to some live charts and start looking at, when you can isolate a pattern or a movement and start telling a story with that movement, you can then start, as the day progresses, telling that story, and as long as you can keep that story moving forward, you can kind of predict not what price it's going to go to. Nobody says ground floor is exactly 302. Okay, we can predict it's going to come down. We can predict it's going to peak up. Once we've isolated, we actually say this is a 4-story building. We then know where the roof and the floor are. This is the ground floor. So we can then start predicting when the asset makes it to the roof, how long it should stay up there, and should it bounce back, go down, and if it's going to go down, where will it go? Here we have a perfect one for the euro-US dollar. We can see this whole story, but once it popped through that roof, because you can't go higher than the roof, the story was over. Sorry. So let's go look at some assets on today's chart, because all we're trying to do is tell a story. You know, when you see a chart pattern develop like a triangle or a wedge, a head and shoulder, that's really just trying to notice a story in the prices. So actually, if I went in here, and this is the current euro-US dollar, and I put on these blue levels to give you different floors, but actually we can then adjust this level by drawing our support and resistance lines on a chart, not from pivot points, from eyeballing. And we can locate, here is a price level that was strategically important, this orange level. Let's move it up a little. As we can see, all the way back for the last week. And this price level has been important. So is the red price level. This is where the asset's sitting right now. We've isolated the blue as another support level. The green, the purple, the green, and then we also have a very high top up here. And these were isolated by looking at longer term charts. Okay, and drawing the support and resistance levels on there. And then the fact is, can I tell a story? Well, look at this story. We can actually see, here's the roof. Here's the floors going down. We touched the basement here. We came up there. We can see the ground floor here. So, oh, wrong marker, hold on a second. So we can see the ground floor here. We can see the basement here, the one time it hit the basement. We can see it moving up all the levels to the roof, back down to the ground floor again, back up to the second floor, back down to the ground floor again. Finally moves up to goes down to the basement, comes back up from the basement, comes up to that first floor, moves up to the second floor, third floor, comes back up to the roof again, comes back down to the ground floor again, and starts moving back up. Comes up to the third floor, comes down to the second floor, goes back up to the roof, comes back down to the third floor. Well, you've now told a whole story about that 4-story building while interpreting price. We've now determined where that roof is. We've determined where the first floor is. We've determined the ground level. Well, you can then incorporate this into your trading decisions. Now, how you're going to incorporate this up to you, but now you've started to make some sense at the market. This is the US dollar. This is what we're looking at is a 15-minute chart here. Now, I can move it back to a half hour because my support and resistance lines don't change. But you're going to use the chart based on the type of trading you're doing. And can we tell a story? And we're only looking at the current. We don't want to tell a story back to 2 months ago. We want to tell the story of where the price is currently. So if we can cut something off and say, okay, here's our story unfolding, that story will hold true all the way up until it breaks that storyline. So if it breaks the roof or goes down way down in the basement, it's over with. But in this case, we can see the roof was up here. For some reason, for this asset, the third floor was very important. So that's the conference room floor. Maybe that you could say there was lots of conference rooms that day. Conferences ended and the price came down to the ground floor, dropped everybody off, went back up to the second floor of the support levels. Everybody was going back to their offices to work at the end of the conference room. They all finished their day's work, came back to the ground level, except for the professionals, the doctors and lawyers on the first floor, and they're still in our office working. Okay. Or maybe this was lunchtime and everybody from the conference came out for lunch. Well, we're going to say, didn't go up to the roof, so nobody's going up to the roof. So it was probably the end of the day. But we were able to tell a story. And that is what is crucially important in being able to understand who is winning the fight in the marketplace. Jamie asked, do you add multiple time frames, 4 hour, 1 day? Support and resistance levels are points in which price had a difficult time passing through. Okay. That point is the same, that price happened the same time, the same day, whether you're looking at a 1 week, a 1 day, or 1 month chart. But if you're looking to establish more long-term things, maybe you weren't able to see, okay, if an asset was trading all the way down here, so for instance, we're looking at here on the euro, on the dollar, okay, down here, the dollar hasn't traded in this level in this chart. So we need to go back to a farther time frame and see if we have something that's going to help us do that. Okay, Jamie, you're talking about more about support and resistance and learning support and resistance. So you need to come to our class on support and resistance. Okay. You could look at, okay, the more ways you look at support and resistance, the better off you are. I use a multitude of support and resistance levels because all the support and resistance, there are no mathematical calculations. They are looking at charts to see where the asset has hemmed and hawed in the past, where buyers have been able to push the price through or stop from pushing. Okay, the more times that price has held true, the more true it's going to be today. Okay, so as you know, as you see, when I change this back to from a 15-minute chart to a 30-minute chart, I can now see more trading in the dollar in this price range. The more recent your support and resistance are, the more important they are. But you can have a zillion support and resistance levels. Okay. So you can get them off of 4-hour charts, from 1-hour charts, because they still hold true in 15 minutes. It just means that when price is moving up, where do you expect it to hem and haw from? Well, the guy who's trading, long-term trading on an asset, okay, he's still got his trade open, so that 97.46 might be important to him and all the other traders who are trading in swing trading, where it might not be as crucial or it might not appear in your daytime chart. That's why we use things like Fibonacci levels. We use crossovers from Gann fans. The more you can define your support and resistance levels, the more information you have. So it is, but that is more for our support and resistance class. Tonight we're just really talking about understanding a story that the asset is trying to tell you, and then putting it into some type of, when people say to me, Barry, Japanese candlesticks are very complex. I can't remember all those patterns. I can't remember what to do, and I don't have the time for doing all that. Others say, Barry, I don't have the time for learn all this Bollinger Band strategy and combine it with MACD. I don't even, it's going to take you years to learn. So all I'm trying to do is give you something in a format that helps you interpret price movement in an easy fashion that works because you use your observation and you use your smarts. If I told you that you were going into a high-rise office building that had 25 stories, say hypothetically, the first 5 stories, all belong to a bank, and you can only get them through a security area. The next 5 stories belong to some diplomatic, some consulate, and you can only get those through a certain elevator. The rest of the stories, the top 3 stories were residential, and after that were some executive high-end office, and after that was where most of general offices are. And if you were standing in front of one of those banks of elevators and you wanted to know how fast you could get up to the 18th floor and how many times it would go up there, you can use your common sense. And then you can combine that with observation. And that's the easiest thing to do with markets, is to observe price movement. And by observing the way that the assets move and trying to tell a story out of it, that story just tries to help you along. Like when you're kids and you're trying to teach your kids to color, or you're trying to learn the alphabet, and you give them a coloring book with the letters, and you kind of teach them what the letters are, and they draw them in hand. They have the picture of the B in front of the B. It's a making them a visual connection. Don't misunderstand. I'm not saying your kids. This is not meant to be simplistic. It's so important for any trader, and especially if you want to be a successful trader, is to feel comfortable using charts and understand price action on charts. And if you can see it in a comfortable, easy manner and tell the story, like I said, of how price is moving, that if I were to sit down with you in a bar after work and you were to tell me how the dollar progressed today or the euro was trading, you left out the story about the 4 stories, but you told me it hit the top down here, bounced off the top right about lunchtime, came back up to the top right after lunchtime. Then it responded to these 3 economic events, and then went down. Guess what? You've told the story of how the euro US dollar is trading it like a professional. And that's all it is, and it wasn't so difficult. So I'm trying to take the scariness out of it and give it to you in a format that maybe you'll find some enjoyment out of reading your charts and spending time with charts, and spending more time with charts before you start trading. And over the summer, we're adding in course. We have a whole new course on MACD. We have a new course on MACD. We have a new course coming up on, I just submitted them. I forgot what the other one was. Oh, a whole new course on Bollinger Bands. And we're going to be doing this course on architecture trading, and we're going to be looking at a high-rise office building and and trying to understand and interpreting what is a volatile market, what is a sideways moving market, what's a congested market, and what strategies and how you might put them together to interpret that. So when you have a nice moving market that isn't volatile but is making ups and downs, which is the 4-story building, which is the nicest, easiest market to trade in, and the nicest story, when you can tell the story and see how price moves along with the story and your observations, because that's the important part, is your observations, and you get comfortable with charts, you'll find that you can start trading a lot more successfully. And guys, on that note, I'm going to say goodnight. It's Sunday evening. Also, starting in August, we're changing the hours of the classes so they're more convenient. People going on vacation is summertime, as people are out a lot later in August. So watch for the change in class, change in times in August, and then September and October we're going to start going to other times as it gets a little bit darker outside. So thank you very much and have a great trading week, and I'll see you on Wednesday. Bye now.